Welcome back to our series on art investment. In today's video, we're diving into Chapter 10, the future of art investment. By now, you've learned about the basics of investing in art, building a portfolio, and navigating the global art market. But what about the future? What does the world of art investment look like in the years to come? In this chapter, we'll explore the emerging trends that are reshaping the art market and how they could impact your art investment strategy. From the rise of digital art and NFTs to the growing influence of technology and data-driven art analysis, the future of art investment is an exciting and rapidly evolving landscape. We'll also discuss how global economic factors could affect the art market and what investors need to consider when thinking about the long-term value of their art collections. Are new markets like NFTs and digital art a fad, or are they here to stay? How will globalization and the rise of emerging economies impact the art world? If you're wondering where the art market is heading and how to stay ahead of the curve, you're in the right place. Let's take a look at the future of art investment and the strategies you'll need to navigate this exciting new landscape. The impact of technology on the art market. Technology has already had a profound impact on the art market, and it's only going to become more significant in the future. One of the biggest innovations shaping the future of art investment is the rise of digital art and NFTs, non-fungible tokens. Let's start with digital art. Artists are increasingly creating works that exist solely in the digital realm. These works can range from digital paintings and animations to virtual reality and augmented reality art. Digital art allows for new forms of creativity and expression, and the accessibility of digital tools is empowering artists around the world to create innovative pieces that challenge traditional art forms. One of the key features of digital art is that it can be reproduced easily. In the past, this has been a challenge for collectors who want to invest in unique, one-of-a-kind works. But with the rise of NFTs, digital art has found a way to retain its exclusivity and value. NFTs are unique digital assets that use blockchain technology to verify ownership. They have allowed digital art to be bought, sold, and collected in much the same way as physical artwork, with the added benefit of provable ownership and authenticity. NFTs have exploded in popularity, with works by artists like People, CryptoPunks, and Bored Ape Yacht Club selling for millions of dollars. This has opened up a whole new market for digital artists and created new opportunities for art investors. But the world of NFTs is still in its early stages, and the market is highly speculative. While some see it as a revolutionary way to collect and trade art, others view it as a temporary trend. Regardless, NFTs are a major force shaping the future of art investment, and it's essential for investors to stay informed about how this market develops. Beyond NFTs, other technologies like blockchain and smart contracts are also transforming the art world. Blockchain offers a secure way to track the provenance of art, making it easier to verify the history of a piece and reduce the risk of fraud. Smart contracts, which are self-executing contracts with the terms of the agreement written into code, could be used to facilitate art transactions and ensure transparency in the buying and selling process. Technology is changing the way we create, buy, and sell art, and this will have a lasting impact on the art market. As a future-facing investor, understanding these technological advances will be key to staying ahead of the curve. The rise of emerging markets and globalization. As we look to the future of art investment, another major trend that can't be overlooked is the rise of emerging markets and the growing globalization of the art world. In recent years, countries and regions that were once considered peripheral to the traditional art markets have become key players, and this trend is only accelerating. China has been at the forefront of this shift. The country is home to one of the fastest-growing art markets in the world, with Chinese contemporary artists like Zhang Xiaogang, Yao Kusama, and Ai Weiwei seeing skyrocketing prices at auction. Chinese collectors, along with buyers from the Middle East, India, and Southeast Asia, are now driving the demand for high-end art, and auction houses are catering to this new group of buyers with specialized sales in cities like Hong Kong and Shanghai. In addition to Asia, the art market is also expanding in Latin America, Africa, and the Middle East. Dubai, in particular, has become a major hub for art in the region, with art fairs like Art Dubai drawing international collectors and artists. In Latin America, cities like Mexico City and Sao Paulo are seeing increasing interest from global buyers who are eager to collect works by contemporary artists from the region. This globalization of the art market has opened up new opportunities for art investors. Emerging markets offer lower entry points compared to established markets like New York and London, but they also come with higher risk. As the art market becomes more global, it's essential to keep an eye on emerging trends and emerging artists from these regions. Investing in up-and-coming markets could offer the potential for higher returns, but it's important to understand the cultural context and economic conditions in these regions before diving in. Furthermore, the internet and social media have made it easier for artists from anywhere in the world to gain international exposure. Platforms like Instagram, Saatchi Art, and Artsy are allowing artists from emerging economies to showcase their work to a global audience, increasing the demand for art from regions that were once overlooked by major galleries and auction houses. Globalization is one of the most important factors influencing the future of art investment. As more buyers and artists emerge from around the world, the art market will continue to expand and evolve, offering investors new opportunities and challenges. The role of data and analytics in art investment. One of the most exciting developments in the future of art investment is the increasing use of data and analytics. Traditionally, art investment has been a subjective process, with the value of art often determined by expert opinion, market trends, and the reputation of the artist. But with the advent of technology, we are seeing a shift toward data-driven art investment. The use of big data and art market analytics is helping investors make more informed decisions when it comes to buying and selling art. Platforms like ArtNet and ArtPrice provide comprehensive data on auction results, price trends, and market performance. This data can give investors insights into how particular artists, styles, or periods are performing in the market, helping them identify promising investment opportunities. For example, if you're interested in investing in contemporary art, platforms like ArtPrice offer real-time information on how specific artists' works are selling at auction, including average price trends, auction success rates, and historical data. With this information at your fingertips, you can make more educated decisions about which artists are likely to appreciate in value over time. Another exciting development is the use of artificial intelligence, AI, to predict market trends. Some companies are using AI algorithms to analyze auction results, social media trends, and even news stories to predict which artists' works will rise in value. This predictive analytics can help investors identify up-and-coming artists before they hit the mainstream, offering the potential for high returns. Furthermore, AI is helping with the process of art valuation. By analyzing historical sales data, AI tools can provide more accurate valuations for artworks, reducing the subjectivity involved in pricing. This can help both buyers and sellers navigate the art market with greater confidence. The future of art investment is increasingly being shaped by technology and data. As investors become more comfortable using data to guide their decisions, the art market will become more transparent, efficient, and predictable. The challenges and risks of the future art market. While the future of art investment is exciting, it's important to recognize that there are also challenges and risks associated with these emerging trends. As the art market becomes more global, more data-driven, and increasingly influenced by technology, investors will need to stay aware of potential pitfalls. One of the biggest challenges is market volatility. Art is still a speculative asset, and its value can fluctuate dramatically based on trends, economic conditions, and even personal tastes. The rise of NFTs and digital art, while exciting, is still relatively new and could prove to be a volatile market. Many investors are taking a wait-and-see approach, and some are even predicting that the NFT craze may eventually subside. It's important to recognize that while NFTs have opened up new opportunities, there's still an untested market that requires careful consideration. Another risk comes from the unpredictability of emerging markets. While markets in regions like Asia and the Middle East are growing rapidly, they can also be affected by political instability, economic shifts, and cultural changes. For instance, the art market in China has experienced fluctuations due to changes in government policy and economic slowdowns. As a global investor, it's essential to monitor these factors and stay informed about regional risks. Finally, there's the issue of art fraud and provenance issues. As the market expands, so too does the risk of buying counterfeit or stolen art. Blockchain technology is helping with authentication and tracking, but the problem of fraud remains an ongoing concern. Investors must be vigilant about the provenance and authenticity of the works they buy and consider working with trusted galleries, auction houses, and art advisors to avoid falling victim to fraud. The future of art investment holds great potential, but it's not without its challenges. As with any investment, it's important to balance risk with reward and stay informed about the evolving landscape. If you found this video helpful, be sure to like, subscribe, and share it with others interested in the future of art investment. Drop your thoughts, questions, or experiences in the comments below. We'd love to hear from you. Thanks for watching, and we'll see you in the next video.